Hai, Assalamualaikum warahmatullahi wabarakatuh. Um, a good day to our lecturer, Real Estate Finance, EMS732. Our group consists by three persons, Azra Azhar Nizam, Shahrul Nizam, and also I am Ahmad Kharamatullah. So our group today will talk on the implementations of general takaful and etika takaful based on property asset. Moving forward to this slide, I will talk about the basic principle of takaful. The basic principle of takaful is mutual cooperations and share responsibility among all participants. Takaful, also known as Islamic insurance, is based on principle of Islamic finance and prohibits the elements of riba, which is referred to the interest, Khara referred to the uncertainty, and maisir referred to the gambling. The policyholder in a takaful system agrees to pool their contributions in a fund, which is managed by a takaful operator. The operator is responsible for administering the fund and investing it in a Sharia compliant manner. The profit generated from this investment are shared among the participants in proportions to their contributions. The basic of principal takaful is to provide a means of protections and risk sharing in a way that is consistent with Islamic principle. It is also encourage the concept of social welfare and community support where the policyholder help each other in times of need. The takaful is based on the principle of tabarru, which is referred to the donations, where the contributions of policyholder are considered as donations. The takaful itself is responsible for managing these donations and distributing them to the participant in case of any losses or damage occurred by them. Overall, the basic principle of takaful is to provide a fair, equitable, and ethical system of insurance that promote the principle of mutual cooperation, social welfare, and share responsibility among all participants. In this slide, I will talk the introductions of property takaful. It is a types of Islamic insurance that provide coverage for any losses or damage to physical property. It is agreement between the policyholder and takaful operator to share the risk of damage or loss to the property. In return for regular payment, the takaful operator agrees to pay for any losses incurred by the policyholder. The concept of property takaful is based on the principle of cooperations and mutual assistance. Under this system, participants pool their contributions into a fund which is used to pay for any claims. The participants share the risk of loss or any damage collectively, and each participant is entitled to receive any payment from the fund if they suffer any losses. Property takaful is based on the principle of Sharia law, which prohibits any form of interest, gambling, or uncertainty in financial transaction. In property takaful, premium paid by the policyholder are not considered as an exchange of money for coverage, but rather as a contribution toward the common fund. The takaful operator invests this fund in Sharia compliant investment that generate profit from the participant. Any profits made are shared among the participant proportionate to their contribution itself. So overall, the property takaful provide an ethical and equitable system of insurance that ensure the financial protections to the policyholder while adhering to Islamic financial principle itself. So in this slide, I attach the three types of takaful. We have family takaful, general takaful, and re-takaful. So for family takaful, specifically this type of takaful provide protections and financial stability to individuals or families. It covers the range of areas such as health, education, and retirement planning. Meanwhile, general takaful is a type takaful to provide protections for asset and liabilities. It covers areas such as property damage, theft, and also liability insurance. In other takaful, we have re-takaful. It's provide a form of protections and risk sharing between takaful operator. In other words, it is a form of insurance for takaful operator themselves. Each of these types of takaful is designed to provide protections and financial stability to the policyholder in a specific area. They operate under the same principle of mutual cooperations, share responsibility, and Sharia compliance, but are tailored to meet specific needs. Here are some key differences between takaful and conventional insurance. First, concept of risk. Takaful operates on the principle of mutual cooperation, share responsibility, and contributions, while conventional insurance operates on the principle of risk transfer and distribution. Second, Sharia compliance. Takaful products are designed to be Sharia compliant, meaning they are developed and implemented in accordance with Islamic law. In contrast, conventional insurance may include practices and investment that are not considered Sharia compliant. Thirdly, business model. Takaful operates on the model of corporations and profit sharing, where policyholder contribute to a fund that is managed by the takaful operator. The company share the profit with the policyholder based on a predetermined ratio. In contrast, conventional insurance operates on the model of risk transfer, where policyholder pay premium to the insurance company, which assume to the risk. And then distributions of surplus in takaful, the surplus generated from the fund is distributed among the policyholder based on their contributions and participation. In conventional insurance, surplus generated is retained by the insurance company as profit. Lastly, investment strategy in takaful. The investment strategy is Sharia compliant and focus on ethical investment, while in conventional insurance, the investment strategy is determined by the insurance company. Overall, takaful and conventional insurance share the common goal of providing risk protection to policyholder, but the principle and mechanism used to achieve this goal differ significantly. So I pass the presentation to the next presenter.
All right. This slide, I will explain about the coverage and benefits of general takaful on property offered by ethical takaful. So generally, the coverage and benefits provided may include number one, accidental loss or damage. Takaful provides coverage against accidental loss or damage due to the building, contents, and stock caused by fire, theft, natural disasters, and other insured perils. Number two, personal accident. Takaful can cover the policyholder or their employees against accidental death, disability, or injury while on the premises of the insured property. Number three, liability coverage. Takaful may provide coverage for third-party liability claims against the policyholder, including property damage, injury, or death caused by the insured property. Number four, legal expenses. Takaful may cover the legal expenses incurred by the policyholder in defending liability claims or disputes related to the insured property. Number five, temporary relocation expenses. Takaful may provide coverage for temporary relocation expenses if the insured property becomes uninhabitable due to an insured event. Number six, loss of rent. The government may provide coverage for the loss of rental income if the insured property becomes uninhabitable due to an insured event. Lastly, number seven, emergency repairs. The government may cover the cost of emergency repairs to prevent further damage to the insured property. So the coverage and benefit of general takaful on property offered by Etika Takaful are subject to terms, conditions, and exclusions as specified in the Takaful policy. Policyholders are advised to review the policy document carefully before purchasing the Takaful to understand the coverage and benefits provided.